Welcome back to Dinar Current. The relationship between the US dollar and the Iraqi dinar has always been complex, shaped by global politics, oil money, and financial reforms. But recently, things have gotten even more tangled. The Central Bank of Iraq and the US Treasury have rolled out new restrictions on dollar transactions, and it's shaking up the entire Iraqi market. These rules are meant to fight money laundering and currency smuggling, but what does it all mean for the dinar's future? Let's break down why these restrictions happened, how they're changing the Iraqi economy, and what's next for the dinar. First, let's look at the background. Why is the dollar so important in Iraq? Ever since 2003, Iraq's economy has been heavily dollarized. Most international trade, especially for oil, and even a lot of personal savings are all in US dollars. The dinar is the official currency, but for big deals and imports, the dollar has been king. The Central Bank of Iraq has worked closely with the Federal Reserve Bank of New York, which holds Iraq's oil revenues. This system was designed to stabilize the economy and keep things transparent. But over time, it became a loophole for illegal financial networks, including smugglers and groups under international sanctions. This vulnerability set the stage for a major crackdown. So, why did the U.S. decide to tighten its grip on dollars flowing into Iraq? In late 2022 and through 2023, U.S. authorities started noticing some very suspicious activity. Billions of dollars were leaving Iraq every month through questionable wire transfers and cash shipments. It was suspected that a lot of this money was ending up in countries like Iran, Syria, and Lebanon, all of which are under strict U.S. sanctions. To stop this, the U.S. and the Central Bank of Iraq introduced new compliance systems. This included a digital platform to verify every international transfer, much stricter vetting of banks involved in dollar auctions, and even blacklisting some Iraqi banks that were suspected of money laundering. These moves drastically cut down Iraq's access to physical U.S. dollars, and the impact on the local market was immediate and powerful. What was the immediate impact on the dinar market? As soon as the new restrictions kicked in, the supply of U.S. dollars on Iraq's open market plummeted. But the demand for dollars didn't go away. Importers, travelers, and ordinary citizens still needed them. This imbalance caused the parallel market rate for the dollar to skyrocket. For example, while the official central bank rate was around 1,310 dinars to the dollar, how did the Central Bank of Iraq respond to this crisis? They launched a series of initiatives to try and reduce the country's dependence on the dollar. One major push was to encourage international trade in Iraqi dinars, especially with neighboring countries. They also started promoting digital payment systems and steering people toward official banking channels to move money. At the same time, they ramped up surveillance and penalties on illegal currency traders to clamp down on the black market. The bank also worked to boost its dollar reserves to make sure there was enough to cover essential imports. The governor of the central bank, Ali al-Awlaq, made it clear that Iraq must strengthen the dinar and build trust in its own currency. But this isn't just about monetary policy. It requires deep structural reforms in trade, taxes, and overall banking transparency. So, how are businesses and citizens adapting to this new reality? Local businesses have had to think on their feet. Importers now face much tougher rules to get their hands on dollars. They have to provide detailed proof of trade documents and licenses before they can access foreign currency. Many small traders complain that this new process is slow, bureaucratic, and adds to their costs. In response, some companies are shifting to dinar-based trade, especially for domestic sales or with countries like Iran and Turkey that are willing to accept partial payments in local currencies. For ordinary citizens, the effects are a mixed bag. On one hand, tighter control over dollars helps stop illegal money flows. But on the other, it's caused significant price inflation, especially for imported goods like cars, electronics, and food, making life more expensive for everyone. Now, let's zoom out to the bigger picture. What does this all mean for Iraq's economic sovereignty? Supporters of the U.S. restrictions argue that this tough love policy will ultimately strengthen Iraq's financial system. By forcing the country to adopt international banking standards and make its transactions more transparent, Iraq can build trust with global partners and stop its resources from being misused. However, critics see it differently. They believe the restrictions undermine Iraq's financial independence. They argue that the U.S. now has too much control over Iraq's money and that these compliance rules limit the central bank's ability to tackle domestic economic challenges. This tension between sovereignty and stability is at the very heart of the current debate, and it's a difficult balancing act for Iraqi leaders. Finally, what does all of this mean for the future of the dinar? In the long run, these U.S. dollar restrictions could lead to two very different outcomes. In the short term, we're likely to see continued weakness. The reduced supply of dollars will keep putting pressure on the dinar in the parallel market, leading to more volatility in its exchange rate. But looking at the long term, there is potential for strength. As Iraq adapts to these new financial rules, improves transparency, and builds confidence in its banking system, the dinar could stabilize and gain more legitimacy, both at home and in regional trade. If Iraq successfully navigates this transition, it could pave the way for a more self-reliant monetary policy one that's less dependent on the dollar and more reflective of Iraq's true economic potential. To wrap it all up, the U.S. dollar restrictions in Iraq represent a major turning point in the country's financial journey. While these measures have definitely caused short-term pain for businesses and citizens, they also present a path toward greater economic transparency and a more stable dinar. The next few years will be a critical test of Iraq's ability to reform its financial system, balance U.S. compliance with its own national sovereignty, and restore public trust in the dinar. Whether this leads to a stronger, more independent Iraq or continued volatility really depends on how well policymakers can manage this delicate balance between control and freedom in the financial markets. Thanks for watching, and be sure to subscribe for more updates on the Iraqi dinar and the global economy.